All right, so 3 weeks ago, I performed some complementary analysis, part one and part two, on the select six shares on the left-hand side of my screen. What we have and what we're currently looking at is Walt Disney. However, we also went through Facebook, Home Depot, LUV, which is Southwest Airlines. We had Micron Technologies, and also United States Steel Corp. What I thought I'd do on this Sunday the 16th of July, is just go back and recap some of those stocks. What we might be able to do also is recalibrate some of those trade setups, but just talk you through really the picture, which is continuing to develop across these six select shares. There's no particular reason why I've chose these shares. They were in a little list that I had created a number of months ago, and I look at this list from time to time for some possible trading opportunity. There is some, and in fact, since that video I released 3 weeks ago, a couple of these trades have triggered, which I will also be updating you on. So what I would like to do to begin with is talk about the construction as to what is going on with Disney. Currently what we're doing and what appears to be happening is that we are sort of, in many instances, really just drilling out a support level here at around 104. We've had multiple touches. We've had one going back to mid-May 2017. We've had two in the month of June, and most recently we pulled back early in the month of July. We're getting a very strong reaction off from around this 103 pivot. In fact, we closed just above 105 as at Friday. What's interesting about this is that we are also building positive divergence. This is otherwise known as bullish divergence. You can see here we've got a low, another secondary lower low, a third lower low, and then a fourth, which is almost what we would assume to be a relative low. So you can see that momentum in terms of price action. When we look at this in terms of waves of selling pressure, the momentum itself is almost exhausting. And the real way to see this is through the MACD. You can see the MACD over here bottomed out in the month of May. This sort of coincided with this short-term base at 104. And you can see ever since then, it's been trying to turn up. In fact, the divergence which we are seeing is in terms of price action, which is still trying to push on down to lower lows. However, the MACD has definitively turned in the opposite direction. In fact, if we zoom in on the detail right now, the histogram bars are starting to once again accelerate away from the neutral line. And again, this is shown by the fast line pulling away or separating away from the slow line of the MACD actual calculation. So this is very favorable. It's very positive. The RSI is also adjusting back into positive territory, and the stochastics, it is relatively still oversold, but mixed with these consecutive lower lows, and again the divergence going on with the MACD and the willingness of these oscillators to flip and move back towards an overbought setting, we would assume that Disney is ultimately going to hit our 108.21 target. Now, we triggered into this trade a couple of weeks ago on the condition that if we did trigger into this, you have to be expecting the pullback, or what we have described to be turbulence. Turbulence is when a stock itself is setting up a reversal, or it's setting up a pivot point type of reaction, but at the same time you have to allow for what we call turbulence or market noise. What this is doing right now is in the process of shaking out a bottom. So even if I move this trigger over, I'm not adjusting the price whatsoever, but 105.70, here we are at 105.10 more or less. Over the next couple of weeks and leading into earnings, we should see this stock move up to 108.21. This is my target, my own personal target on Disney. And there's a number of reasons why I expect we're going to get here. We're not technically trending, even though the exponential moving averages are acting as resistance. You can see most recently, towards the beginning of July, we saw a very strong reaction, a very strong engulfing candlestick two-day reversal pattern off from that 50 declining exponential moving average. We also have this upper wick, which is taking place right at this purple declining 50 exponential moving average. But again, a lot of people will sort of misjudge or misinterpret this actual technical sort of indicator that you look at, because Disney itself is really moving sideways. If you zoom out and look at the price action since December 2016, it looks as though we are somewhat stuck in a rectangular type of consolidational pattern. And again, this is what we call wave rotation. So you can see the first wave rotation back up to about 116. It looks as though, again, this secondary wave of selling pressure back down to the 104 pivot is exhausting itself with all of these pivots and short-term bottoms over here, and that over the coming months, and of course this is largely dependent also on earnings, that we are and should see another another move all the way back up to 116. So it's a stock where you have to look at a little bit patiently, a little bit constructively, but understand, I mean, just to break this down as very simply as I possibly can, or to really condense this down into a couple of sentences, you have to remain bullish on Disney, allow for market turbulence, allow for a little bit of market noise as we sort of establish this pivot, but you can be bullish and remain bullish on this stock as long as we hold above 101.73. If we start definitively cracking this swing low and also this swing low over here, well then it will be more short-term bearish orientated. But as long as we remain above this with those oscillators again looking rather exhausted on the sell side, you should see this snap back and eventually rotate all the way back up to 115.48. And I just wanted to make that very clear with Disney again. You have to keep, I guess, your market expectations in check with what the market is doing. The market is just broken out. And again, this is a rather good segue into the second stock. This is Facebook. Now, again, 3 weeks ago, we were looking at this particular stock anyway. We understood that obviously it was in an uptrend. It was looking relatively healthy, but we were open-minded that we were setting up some form of a channel consolidation. Now, I haven't touched these triggers whatsoever. One is a definitive default line. It is a strong line. It doesn't have any separations in it. The secondary line over here is what we call a dashed line. So of these two, if you ever look on my screens when I perform analysis, whenever you have a straight line with no dashes, it means that it is a legitimate trade entry for myself. And I'm only speaking on behalf of myself. Whenever there is a dashed line, it means that you can make the argument for that directional side of the trade. However, we are not placing it for a certain reason. And the reason for that was because essentially it was counter trend. If I bring up these exponential moving averages, you can see in the past that Facebook continues to hold at that rising 50. So very similar to recently on Disney, how it has seen some selling pressure at the declining 50. Facebook is a little bit different in that it is trampolining off from the rising 50. However, Facebook is in a trend and it continues its trend or its advance to the upside. You can see the difference between Tuesday and Wednesday's candle. This is a very, very bullish signal. Not only did we see a gap between Tuesday and Wednesday, you can see the gap and it's still open, which is rather interesting as well, but the gap has actually occurred over a resistance area. So this is exceptionally bullish. If you want to take anything away from this particular sort of stock announcement or stock analysis, whatever it is you want to describe or sort of count this as, the major lesson is this: if you see a gap above a macro resistance area, above a channel consolidation, and then a continuation above that candlestick, it is a very, very bullish sign for whatever chart, whatever financial stock or traded instrument it is that you are looking at. So Facebook is broken above 157.32. This is another favorable trade for us, another profitable trade. We closed at 159.97. We're very close to 160. So we've made almost $2.70, $2.80 on this particular position so far. What you need to keep in check, of course, is earnings. So earnings on this trade is the 26th of July. Also with open gaps in this particular location, they can, of course, form. It is quite rare to see this type of gap form, but when it does, it is exceptionally powerful. But it can also pull back, retest, and then bounce. So this is what we call a 1, 2, 3, the retesting of the breakout pivot, which is coming in at 155. And if this does occur, it is another potential opportunity to begin legging into long-term positions on Facebook if you missed the 157.32 entry. I'll be trailing my stop below the gap down here at about 154 at the moment. All right, so Facebook is looking very, very healthy. Let's move into Home Depot. Home Depot is one of the three which hasn't triggered whatsoever. In fact, I haven't touched this red box in 3 weeks, and you can see the price action. I mean, if I just move it over, you can see how pretty close we are to really containing the range bound type of really tight channel consolidation going on with HD. You can see that we're between 154 and 150. This is essentially no man's land. So when we identify these types of areas, it's really best not to do also much until the structure really builds. And although we haven't been active in a trade, and looking back on this again in retrospect, there's been no reason to actually enter into a trade, so it's working out quite well for us. All that is happening right now is that it is developing the criteria, the checklist of what we want to look for as technical analysts before we start jumping into, or at least setting up some conditional entries to begin trading HD. And the more I look at this chart, the more constructive it becomes. It was looking rather bearish once we saw some of these exhaustion gaps and even potential island reversal gaps. We saw the breaking of the trend line, which is still a major sort of technical sort of breakdown of the chart itself, but we are also holding above this rising 100 simple moving average. This is the long-term macro trend of HD. This pink line here is the 100, and this sort of faint blue line here, this teal color here, is the 200 simple moving average. So price action is still above both, and we are also starting to jump off from that rising 100, which is another sort of favorable sign for us for the long-term trend conversal, or the long-term trend continuation, pardon me. The exponential moving averages are moving sideways. They're not really helping us. There isn't essentially a trend at the moment. We are range bound, but again, these oscillators, this is a common narrative, not only for the majority of shares on this list, but also in our pro list, and also for the broader market as well. We have pushed into, or at least corrected into, a rather oversold type of reading. It hasn't been as extreme as what we would have liked to have seen before these breakouts across the board on the markets. But again, we are relatively oversold, and you can see that they are beginning to turn up. We haven't broken above this level, nor have we broken down around this range, but the oscillators are suggesting that we might make a mad run or another dash up to about 159 on this. So the more I look at this trade, the more I like it. So what I'll do, I'll place a little trigger here at 155, and this will be about $4 of profit up to about 159. So I mean, you can see that it's a quick $4. If it chooses to run in this direction, which is going to be interesting, it might also coincide with the back test of this trendline extension. So you see this red line over here. Oftentimes, and again, this is where technical analysis is really sort of blending the art and the science of it all. Often what happens is once you establish a trend line, once you break that trend line, you come back up on at least one occasion and you retest that trend line, which was once acting as support and where we're seeing all these bounces off from. It will retest it as resistance, and that would also sort of correlate with a potential three peak sort of top over here. And this is now the established neckline. So we're starting to also not only look at short-term tradable opportunity, but also get an understanding, a feel of the sentiment as to what is going on if in fact certain chart patterns play out, especially if we run on up to 158 and 159. So we're really starting to get a little bit of creative, I guess, in the world of analysis, but the creativity is very important for you to get a sense of the sentiment, which is underlying, I guess, the nature of the stock itself. So HD, it is it really has that moment of integrity, really, where it's going to show us whether or not it is going to continue the macro trend which it has been in, or if we're going to see some big, or at least a larger correction take place as well. I'm not sure which it'll be, but I am prepared to trade whichever direction it chooses to do so on the more so the intermediate level of this picture. Let's continue with LUV. LUV triggered at, what was it, 62.55. It has pulled back, but if I bring up these exponential moving averages, you can see that once again we're holding at support. So the 10 and the 20 are continuing to hold as support on this rising stock. It did sort of move a little bit parabolically about 2 weeks ago. It was looking very profitable. It got up just shy of $64.30, I believe it was. But we have seen a couple of reversal signals. Earnings is later in the week. That isn't, later in the month. It's not all that concerning at the moment, but it is still looking rather healthy. On the short term, the minor level, when you see these oscillators move into sort of a reset zone, or when they actually establish themselves as sell signals, which they are doing essentially right now, it doesn't mean that you're going to move bearish on the stock. It just means it needs time to rest. Okay, it just needs time to rest. And oftentimes when you see those oscillators turn down, it will work in alignment with the ADX turning down, which is exactly what has happened, although it wasn't all that extended, which is still saying that there's a lot of movement for this stock to go until we need to be concerned about sort of trend exhaustion. But also the CCI is starting to push on back down below 100. So it looks as though we are going to have to persist through what I was calling turbulence or market noise, so to speak, with Disney. And this is just happening on LUV in a different location to where that is happening on Disney at the current juncture. So this is a stock which has all of the potential to continue. If it does, it would be a break above this little swing high over here. This is coming in at 64.56. But until then, expect this stock to sort of continue to move sideways until those oscillators reset, and then we will see that next parabolic move to the upside. MU hasn't really done a whole lot. We sold off very aggressively. We hit support. We're bouncing off from support. We still haven't broken above 33.15. This diamond pattern, which we were sort of addressing a number of weeks ago, it was a little bit flaky. We didn't place all that sort of emphasis on the actual analysis itself. What I'm really liking about this stock is that it's still holding above those rising exponentials. We do have 3 consecutive lower highs at the moment, but if the market continues to trend and it continues to move aggressively bullish, it is going to be a nice little trade which should continue above 33.15. So this is something that we have on the radar, or on our radar, but it isn't something that we are in immediately at the moment. It is something that could trigger potentially this week. If not, it's going to be something that will monitor. But when the time is right and whenever price action for Micron Technologies chooses to do so to push above the little peak we had in late June and also earlier in the month of June, this is going to be a trade very similar to that of Facebook. And just going back into Facebook also, I just wanted to show you that when I bring up the ADX and the CCI, you can see how on Facebook, the ADX is definitely advancing very, very nicely. We've got a long way to go until we move back up into sort of this naturally sort of overextended range, which Facebook can sort of linger into. But more importantly and more telling at the moment is that the CCI has definitively broken that 100 signal. You can see it's printing at 165. So this again is just confirming this breakout, which we've already seen in Facebook. I've spoken about MU. I mean, I can go into further detail, but right now we've got other stocks which are more interesting at this particular point. It is still rather neutral, I must admit that too. But in terms of a general risk and reward sort of breakdown, more of the reward sits on the bullish side or the favorable side rather than the breakdown below this particular wick over here. If we were to see a breakdown below about, I mean, I can draw this figure on. If we were to see a breakdown below 28.22, it would take us down to this green box or even this rising trend line. But again, it doesn't really give us, or it doesn't really open up the doorway, the portal, so to speak, of too much opportunity in terms of reward. It'd be a very quick trade, and then it would be a reversal trade for the next up leg as well. So MU is rather bullish just looking at the chart itself. And really to conclude with, there isn't going to be a part one, nor is there going to be a part two in this particular video. I'm just going through all 6 of these now. But X has been something which has been a little bit frustrating. I mean, we tagged it a number of weeks ago. We pulled back. We're back up above 23.26, so closing more or less right on that pivot. What's interesting about this is that it looks as though we're establishing a low, another higher low, and a third consecutive higher low as well. It looks as though this trend is starting to reverse, or if we can break above the gap, and just to zoom in on this, the gap going back to April, it looks as though we are potentially about to break through it. And if that does occur, it should run us, or it should take us all the way up to $30 a share. All right, here we are at 23.21. You can see a little bit of a slowdown between Thursday and Friday, a high wave spinning top on Thursday with some added volume. So a lot of traders, active market participants, they're paying attention to this open window. And again, I'll just draw it on the screen for you. You can see right here. And what we just did on Thursday and the small little pullback on Friday. But if we can definitively break above this level over here, we should see this run again up to $29.99. Now, going through some of these trades, I wouldn't encourage anyone to do this with real money unless you obviously know what you're doing. Instead, I would encourage you to do this in virtual accounts where you can do it with obviously virtual funds, and you can see for yourself how these positions will naturally work out. It also gives you the opportunity to get a really good understanding, I guess, of the psychological aspect of trading when trades move immediately in your favor versus having to sort of go through that turbulent type of time where you see a short-term reflective losing position. Of course, it isn't realized, it is just open. But again, a lot of trading, you can sort of teach this information to a lot of people rather easily, but I'd say the biggest component would be the psychological aspect of trading the financial markets. Not everyone can do it. It is certainly challenging, but there are techniques obviously that you can implement, and that is really through backtesting and conditioning and going through this. I mean, running through the steps of just a repeating pattern over and over again, which can really sort of negate, or at least almost sort of withdraw the emotional aspect of trading, because you're so conditioned on what to expect, how to expect, obviously what's flowing down the pipeline, and then really just to have a really good strategy which you can implement in terms of mitigating risk and also opening up reward, where it really makes trading the market quite satisfying, if not fun, and a really good sort of experience for those willing to take their trading to the next level. So I'd encourage you anyway to invest in yourself, first of all, to understand this information, and to be comfortable with it before you start moving into any real money trades. And that goes for anyone around the world watching this video, okay? If you have any questions at all, please email me, success@pivotpoint-trading.com. I would be happy to answer any of your queries. Until then, everyone, I hope this has been beneficial for you. I'll say goodbye, and I'll be back with you during the week for some more relevant market discussions. All the best. It's James signing off on behalf of Pivot Point Trading. Goodbye.